And we're going to start now, though, turning to the stock markets, which have really been top of mind for both that meeting and for so many across the country. Markets tumbling out of the gate today. They have yet to recover after one of the most historic days of gains in recent history. The bounce back followed President Trump announcing a pause in reciprocal tariffs on most of the U.S.'s trade partners, while once again raising the levies on China. Yesterday, the president said he was increasing tariffs on Beijing to 125%. But when combined with an earlier 20% tariff to curb fentanyl, that number is up to 145%. 145% on some Chinese goods. All that uncertainty is being reflected in the market. Here's a look at the big board following the news. The Dow Jones is down 2.66%. The S&P 500 and tech-heavy NASDAQ also suffering heavy losses. Despite yesterday's positive rebound, though, the market is still down overall since President Trump's so-called Liberation Day, of course, when he announced those sweeping tariffs and what he calls his reciprocal tariffs on almost all of the U.S.'s trade partners. As the markets falter, President Trump there meeting with his cabinet at the White House today, just wrapping up moments ago. And during that discussion, he stood by his decision to raise levies on China.
We're in very good shape. We think we're doing very well. Again, there'll be a transition cost and transition problems, but in the end, it's going to be a beautiful thing. We're doing again what we should have done many years ago. We let it get out of control, and we allowed some countries to get very big and very rich at our expense, and can't let that happen. It's not a sustainable formula.
There is, though, some positive news for the U.S. economy in all this. The latest numbers from the Bureau of Labor show consumer prices cooled more than expected in March, bringing inflation to 2.4% from the same time last year. Joining me here on set is CBS News MoneyWatch correspondent Kelly O'Grady, who has been a very busy person the past couple of days. But Kelly, I know that yesterday there was a lot of rallying. Despite yesterday's spike, though, the market's still down from where it was prior to all these tariffs being announced. What impact is this trade war that continues to evolve? What impact does it have on the U.S. economy overall?
Well, that remains to be seen, right? Because we don't know how much of these tariffs will get passed on by businesses to consumers. We also have that pause. So that 10%, where does it go in the future? Where does this, this up and down with China go in the future? I want to just go back to the markets for a second, because we were down, just when you were reading this intro, about 1,000 points or so, give or take. We were down in the Dow over 2,200 points at one point. And with the S&P 500, we were roughly about 6% down. The circuit breaks when you reach 7%, and trading is halted because there's too much volatility. And so I bring that up because investors had this moment of sugar high yesterday. And there was a lot of excitement that there might be deals to be had. And today, it's all sort of coming back to reality. And I was talking to a number of economists. They said, look, we didn't necessarily celebrate yesterday, because even if we have a 90-day reprieve, what happens after that? What happens with China? And what happens with consumer sentiment? Because consumers may decide to pull back on spending regardless of what happens. So I wanted to weave in the markets to answer your question, because you are seeing that anxiety about where the economy could go reflected again in the markets, even after yesterday's sort of euphoric piling back in.
Well, and you talk about markets and all the volatility. The president admits he was monitoring the bond markets, which have gotten a lot of attention today because it factored into his decision to extend, put a pause, I should say, on these tariffs for 90 days. Why does the bond markets, for people who don't understand, hold such sway in making these kinds of decisions?
All right, I'm going to get nerdy for a second here.
Do it.
Okay. So the bond market is traditionally thought of as a safe haven, a steady return, because what that means is you are buying, 10-year Treasury, 2-year Treasury, you are buying America's debt. And the idea is that America has a strong economy, a strong dollar, and they're going to be able to pay that debt. And so when you see money leaving the stock market, the idea is, well, it would likely go into bonds, because that's not going to get as high of a return as you might in the stock market, but you are betting on the U.S. and that being a safe economy to be in. We saw not a lot of interest in a couple of auctions for some of those bonds. And so
Difficulty.
the president, a lot of people are saying was bullied by the bond market. We're hearing from the White House that it did factor somewhat into the decision. But really, this was just kind of if people aren't willing to buy that debt, that is a concern for the U.S.
And was that something that we saw even just Tuesday night going into Wednesday morning that triggered this about face?
Again, one of the things I think only in the president's mind will he know exactly what triggered it, but it was certainly a contributing factor.
Also, Kelly, as we mentioned, consumer prices, CPI, cooled last month. And it's important to note, of course, this does not include all of the effects that we've seen from these tariffs on and off. What's driving this slowdown in inflation?
Gas. So gas prices were down over 6% month over month. The monthly number, the average number from the report to compare that with, is down 0.1%. So 6% versus 0.1%, that's really where the losses were coming from. And I should say losses isn't the right word. Prices are still rising, just at a slower rate overall. So that's where that 2.4% comes from.
All right, Kelly O'Grady, thank you very much for your time. For more on this is CBS News White House reporter Willie James Inman. Willie, so glad to have you with us. Beijing is vowing to, quote, fight to the end in this trade war, but it also says the door to talk is open in the wake of all this tariff exchange tit for tat that we're seeing. How is the Trump administration responding to this threat, and is the president open to possible negotiations with China?
Hey there, Nancy. Good to see you as well. The president just alluded to this a little bit in that cabinet meeting. He said he had great respect for President Xi of China, and certainly the U.S. is looking to make a deal. That has been the line, that has been the message from the president and other U.S. officials, that they're open to working out something that benefits the United States. Of course, let's remember that the U.S. levied those reciprocal tariffs of 125% on China. You still have those the 20% fentanyl tariffs in place as well. So goods could potentially get more expensive. It's anyone's guess as to when and how that would happen. As Kelly mentioned perfectly, sometimes companies absorb these costs, but oftentimes they pass it on to the consumer. But the president, the White House, looking to make some type of deal in the near future with China and other trading partners, including the European Union, which levied reciprocal tariffs, then pulled back once the president delayed that tariff plan that he mentioned just days ago.
Sure. And Willie, just hours before the president put that 90-day pause on most U.S. trade partners, he put out a Truth Social post, and we're going to pull it up right here, saying, quote, "This is a great time to buy." Now, immediately after that announcement, the markets skyrocketed. There's been some criticism of the timing in all this. So how is the White House explaining it?
Yeah, there has, because let's remember that the president, just a short time after he sent that Truth Social post, changed his mind on these tariffs, going to levy those tariffs on imported goods from the European Union and other places as well. But the White House is looking to downplay or sidestep this a little bit. The economic advisor to the president, Kevin Hassett, was asked about this earlier today. Listen to what he said.
I think the president's policy has gotten us to a very successful place where we've got countries all around the world lining up to come up with policy changes that are going to make America great again. And I don't think that he ever had any other intent other than to get people to the table with serious policies on our part that were going to go into place and be permanent if people didn't change their negative ways.
And adding on to that, Nancy, a White House spokesman says it's the president's responsibility to reassure the markets and Americans about their economic security.
And Willie, real quick, we're going to turn to Russia, which released a dual U.S.-Russian national and apparent prisoner swap between the White House and the Kremlin. What more are we learning about this and the terms of her release?
Yeah, that's right. We're learning that Ksenia Karelina was released following her sentencing in Russia, sentenced to 12 years in prison for treason last August because she donated to an aid organization that was giving assistance to Ukrainians affected by the war. We're learning that this deal was being worked on behind the scenes with the spy agencies of the United States, in this case the CIA and the Russian FSB, that the CIA director was the point person in negotiating this release. And we also learned that she is, of course, now coming home. We're learning that the U.S. exchanged a person that the Russians wanted back for this woman. So a lot of moving parts here. The U.S. working to get Americans back. And Secretary of State Marco Rubio said POTUS will continue to work to release all Americans. That statement coming shortly after this news broke earlier this morning, Nancy.
We know you'll stay on top of it. Willie James Inman at the White House for us. Thank you.